This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, good evening, everyone. This is AJ Monty, and it is 8 p.m. on the nose, Eastern Standard Time, of course, and I know we have some folks dialing in from different time zones, and again, I'd like to welcome you to tonight's Q&A open house session. This evening, I'm going to change the pace just a little bit and talk about cycles and how important that is for not just the investors, but for traders alike. And we will also go through your individual stocks and talk about the support and resistance areas, and also entry points and exit points for those stocks that you hold or those that you're looking at. As I usually do, I start off with an overall market analysis. Looking at the diamonds, this ticker symbol DIA, it's the Dow Jones Industrial Average ETF. And again, I left my lines from last week's market report, and I said I thought we would go up a little bit at the beginning of the week. That's what that little hash mark there is. So we would go up a little bit, test resistance right here, which is a minor gap fill point right there, and then I think we'll ultimately come back down to fill this gap. So keep this in mind as we look at your individual stocks, because chances are your stocks are going to follow the Dow, the Russell 2000, or maybe even the spiders, and you don't want to get caught in an off cycle. Although I think we're going to see short-term lower prices, there is a good chance that we'll see what's called the Santa Claus rally. It's usually a year-end rally which falls into an annual cycle, which again I'll get into in just a little while. If I look at the spiders, SPY, that's the S&P 500 ETF. Chart's a little bit slow tonight, but you'll see that come up here in a moment. You see, I, again, left my lines in place. Here's the resistance area that I drew, a horizontal line right there. And my forecast for the rest of this week is that I think we're going to go lower to fill this gap. The S&P 500 rarely leaves open gaps, and that's why I'm short-term bearish for the S&P, because like all of the other gaps that we've seen in the past, I believe this one has a very high probability of filling. And for those of you who are brand new to the Market Guys, or even brand new to technical analysis, a gap is nothing more than a price void. It's an area on the chart where the stock has not yet traded. It just kind of skipped over that price level, and it leaves like a hole in the price action. And 80% of the time, gaps fill. But in this case, 100% of the time, for the spiders, gaps fill. And again, don't take my word for it. Here's a little minor gap. It gapped up, came back down, tried to fill the gap, didn't quite do it all the way. It wasn't until this day, back on September 22nd, that this gap back here actually filled. Here, you can see gap here, price ultimately filled those gaps. It doesn't matter where you look, you'll see big gaps, small gaps. For the spiders, they fill, and that's why I think we're, again, I don't want to be redundant here, but that's why I think we're going to pull back a little bit before we go higher towards the year-end rally. Okay, let's look at the Qs. QQQ, it's a NASDAQ market. Call that the power shares, triple Q. And look at that. Isn't that amazing? I mean, I just, sometimes I look at this and I go, wow, people must think, you know, I have some kind of sixth sense for the market, and I do not. I'm just telling you right now, I will confess I do not have the ability to see into the future. However, the forecast that I put out for 2015 has been, since the beginning of the year, 100% accurate. I don't expect, obviously, to continue 100% indefinitely. But the good news for us at this particular point is that no one could beat the record. You can't get better than 100% when you're forecasting. So I challenge. I was on a radio interview. Actually, it was a web seminar that we did that was also simulcast, and the gentleman who was interviewing me congratulated me on the forecast because he's been tracking. And I challenged his audience actually to try to at least match my forecast. And again, it's not in my ability to forecast or see into the future. It's simply a skill that I've picked up over the years that I'm trying to teach each and every one of you how to read the signals. Now, again, I just want to stay on the cues just for a short bit here, because I want to show you why I think we're going to pull back from this resistance point. And for those of you who have been on the regular web seminars, you'll probably jump ahead of me. There you go. Larry already has. Larry is pointing out what I'm about to point out, and that we see lower volume here. Now, look, over the past 4 trading days, this was Wednesday, Thursday, Friday, and then today, Monday, we've gone almost vertical in price. But the volume has dropped consistently for the past 3 days, and it's basically the measurement of the buying power coming into the market. I learned this many, many years ago, over 30 years ago. I remember this was one of the most important things that we followed when we were trading the futures market. Volume has a huge impact. And we didn't really have the charts 30 years ago to follow. What we would do is the exchange would track the number of contracts traded each and every day as the contracts were traded. So it was dynamic reporting, and they posted on the ticker tape and on the trading board, and the traders would actually look at their watches and they say, okay, 10 o'clock, here's the volume today. Well, how does that compare to yesterday? And 12 o'clock would come. Then 1:30 was a big time. We call that the 1:30 rally. Consistently on the trading floor, we'd see a 1:30 in the afternoon. We'd see a rally, and then again we watch volume, and then of course we'd look at the closing volume, and we actually kept this by hand in notebooks. We would track volume, and it was absolutely a leading indicator. Unfortunately, a lot of people have forgotten about that as a leading indicator, and that's why I refer to volume as the forgotten leading indicator. It is one of the most reliable leading indicators you can find, because if price is going up and volume does not support that move, then guess what? It means the buyers are slowing down and the sellers are getting ready to pounce on it. And again, look at that, right to that line. I mean, we closed almost exactly on that line that I drew from last Friday. It's incredible. Now, part 2 of the story is if tomorrow we have a red candle, then again, we're heroes, right? Because it would have pulled back. And then if we have a red candle tomorrow, it's now tracking the downward line. Now, a lot of times people ask me when they have the opportunity to talk to me on the phone, well, AJ, why did you draw it at that angle? And again, it's not rocket science. I'm just observing price movement and past price action. You can see that from this low right here, and I'll draw the line, but then I'll have to erase it because I don't want to mess up the charts, because I report week after week on the same lines. But if you look here, if I take that low and connect it to that high, you'll see that the angle from this low to this high is almost parallel. You see that? Look at the angle of these lines. So how and why did I draw it at that angle? Because look at that. I just took that. Boom. It's almost parallel, and I just basically took my mind's eye and I ran a line parallel to what I saw here, and I drew it downward. That's all I did. And you could do the same exact thing, and I would encourage you to try to do that each and every week. Try to forecast yourself, and don't worry about putting money in a trade or I'm just almost screwing that up there. Don't worry about putting a trade on. Just do it without even trading. Just go ahead and try to forecast some of the angles of what has already happened and basically draw lines parallel, just like I drew here. And you can see I left that line up there. Probably should have taken that one down last week. Okay, so remember this. Another thing, and not just the angle, but I want you to get in the habit of looking at what I'll refer to now as the frequency of the cycle, or the frequency of the moves. You know, we have the wave action that we call price action, but you can see it's almost like a wave. Now I'm going to do something here, and then again I'll erase these lines. But look, here's a high right there. You have to identify where a peak high is. Right there on August 5th, there is a high. If you look right here, there's a high. Look at that. There's a high. And here's a high. Now, it's not exactly to the day, but you can see that the highs are very, very vertical lines. It's really amazing how the highs and lows match up in that cycle. And again, for the swing trader, this is extremely important information, because the market does have cycles, and you could really pretty much compare the cycles of the market to actual seasonal weather cycles, weather patterns. And I've said this before, but I'll say it again, because you have to understand that we, as human beings, operate in 4 seasons, right? Winter, spring, summer, fall. Every 3 months we have a change in the season. And it really is an amazing thing to see, especially in the commodity markets, how commodity prices also follow very closely to weather patterns. And that's simply because when you're talking about corn, or you're talking about coffee, sugar, cocoa, orange juice, these crops are generally influenced, or the prices will reflect the seasons. And sometimes in an extreme drought, you'll see prices tend to rally. Why? Because the crops are being affected in a negative way. This was the whole theme or premise behind the movie Trading Places, if you remember. Eddie Murphy and Dan Aykroyd were waiting for the weather report, and that happens over and over again. So again, this isn't, you know, voodoo magic and tea leaves. This is real science. And fortunately for me, you know, my degree is not in any kind of economics or anything. It's in aerospace engineering, and a big part of what we learned in college was actually weather patterns, because as a pilot you have to know what's ahead. You have to know which clouds are representing danger zones, and you know, we have to study weather. And if you really want to have some fun, start tracking weather patterns as you watch the news, especially out in the Midwest. And or here's a better way to do it: get the Farmer's Almanac, and because it's been pretty accurate over the years, and compare that to the prices of some of the commodities. And you know, you could even look and trade. There's stocks out there. This is corn. It's the Corn Fund, and you can see that during the height of the markets, look at this, from June to the end of July. Look at the price spikes. Again, I could put this on a cycle as well, and you can see that corn also happens or trades in waves. I'll even go here, and you can see that. Look at the waves. You can see if you took the lows here, 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 you can ultimately forecast and say, okay, there's going to be a low somewhere out here in the beginning of 2016. You'll probably see another low and a rally after that. So before I get into the actual cycle, the measurement of cycles, let me just go to the VIX. The volatility index, yes, another leading indicator that a lot of people just forget to include in their watch list. This is my forecast. I said I thought that the VIX would probably rally from here, and one of the reasons is if you look, we have a long stretch of red candles. The volatility index works inversely to the S&P, so we're long overdue for a stretch of green candles. I think we're going to see that most likely this week. If it doesn't happen, then oh well, I've blown my 100% accuracy, but I'll settle for a 99.9% accuracy any day. And I think that we'll see some green on the volatility index, which ultimately means what? It means down for the S&P. Okay, I talked about cycles. Let me go here. I already have one preloaded. And this, for those of you, this is a free website. John Murphy, who was a technical analyst for CNBC for many years, I know John from the MTA, the Market Technicians Association, and years ago John started this website called StockCharts.com. And actually, let me do this. I'll go and start it from the beginning so you can see. If you go to the charts right here, free charts, you can type in a symbol here. And I typed in the diamonds. And then what you could do is you can annotate. So put in your stock symbol. I'm using a daily chart right now, but you could also go to weekly if you want to track it that way. But I want to show you daily. And then you go to annotate. Again, I've repeated this over the course of time, so some of you already know this and have this bookmarked. But when you click on annotate, right just about, let's say, halfway through the icons up here, there's a cycle line tool. You see that? And you can click on this one. When you click on it, you'll see your arrow turns to a crosshair. Hopefully you can see that. And I'm going to pick some obvious lows. Okay, well, I'm going to pick this low, and then what I'm going to do is I hold my mouse down and I drag to the right, and it has like this accordion effect. As I drag to the right, the lines spread out. As I go to the left, they contract once again and they get tightened. But what you want to do is you want to try to find as many of the lows as you can and then drop the line. And look at this. Now, this particular cycle line tool is going to measure exact days. Unlike what I did on the vertical lines on my Thinkorswim platform, this will accordion out, so to speak, into a regular daily cycle. And I took it from this low, and you see there's a slight low pivot point there. Then we're only off by a day on that low. We're pretty much on the mark for that low. This one missed. This one hit. That one hit. This is 2 days off a low. This is right on the low. And look at how that fell right on a bullish engulfing pattern right there. And now what is this? What can we get from this that will actually help us forecast when the next low is? Well, here's how you do it. If you put your crosshair, and hopefully you could see this, if you put your crosshair on any one of those blue lines, off on the bottom here, watch how, see it says tooltip right there? Watch how it changes when I put my crosshair on the blue line. Right there, it's telling me that that is September 15th. See that? September 15th. If I go to my next line right there, that's October 2nd. So that's roughly a 2-week span in the cycle. So in other words, each one of these blue lines are separated in time by about 2 weeks. So here we are, October 2nd in the last line. 2 weeks from now, 2 weeks from here, we should start to see a move towards a low, which would bring us to October 15th, right? And if I move this over one more, let's see if I could take this and slide it over one. See, there we go. I could even do this. So right now, here's a cycle. It's probably not going to hit on a low, but it could also signal a pivot point on a high. Because when I shifted it just a little bit off, watch what happened. I just shifted it to left 2 days. Here's a high. There's a high. There's a low. There's a low. There's a high. There's a low. There's a low. There's a low, there's a low, here's a high. See, so it's cycling on a high and or a low every 2 weeks. So again, if I say, okay, 2 weeks from this date, which is October 19th, 2 weeks from that is going to bring us towards the end of October. So what does that mean? In forecasting, it means that we could start pulling back from this blue line right here, because I shifted it 2 days to the left so we can get to see that line. And that means that we could start heading lower. And then 2 weeks from now, it will give us, most likely, we'll run into a low at that particular point in time. Okay, so look at your calendar, and you'll see that we'll probably be hitting a low right around November 2nd. That's if you go 2 weeks from today, being the 19th, 2 weeks from today is going to be November 2nd. Now, let's talk about the other cycle as I leave this chart up here, and I hope you have some questions for me in a little bit, because I am taking questions, especially on this. If we're expecting a low in 2 weeks, what am I expecting after that? Probably a rally, right? Because again, we're working in 2 week cycles here. The other big cycle that many of you are familiar with is, they call it the Santa Claus rally. It is a year-end rally that we generally see in the last 6 weeks or so of the year. Now, although many people look at it as a cycle, I look at it as manipulation. And don't be shocked by this, and I've said this on public airwaves before as well. If you were a money manager, if you were a hedge fund manager, if your livelihood depends on how much profit you make for the company you're working for, you obviously want to get the biggest payout at the end of the year, don't you? Well, here's what happens. What happens is, just about November, a lot of the hedge fund managers start selling out of positions. Why do they do that? To create cash. Now follow me here. The more cash you have in the bank, the more buying power you have. And towards the end of the year, what happens is the money managers, hedge fund managers, traders alike, will take that cash, and in the last weeks of the year, they just go spend it on the positions they currently own. I hope that's sunk in there, because that's really important. Imagine for a moment you own XYZ stock. You have cash that you've brought to your buying power through the sale of other stocks that you may have, and you take the remaining cash in the last part of the year, and basically what you're doing is you're spending the cash to bid up the price on the shares you hold in your position. The year ends, market closes, the bell rings, boom. You don't have to sell out of that position to get paid on it. It's based on a market. It's marked to market. So whatever the closing price is on the last day of December is what your bonus is going to be paid out on. Understand, this is pure manipulation. I don't disguise it. I don't sugarcoat it. This is exactly what happens. As a market maker, I would watch it happen firsthand. As I was a professional trader, I would talk to other traders who were doing it, but it's something that's hardly ever disclosed. And you'll never hear it talked about on CNBC or any of the other financial networks, because the general public would say, wow, that they're manipulating it. Yeah, well, guess what? That's what happens. It's real life. Who would like to put in a stock symbol, and we'll throw it into the cycle finder here? Who would like to do that? And I'm going to show you another way to do this. Who else wants to put in a stock symbol? Let's see. Ron wants TNK. Make sure that U.S. stocks. I know we have a lot of Canadian folks on the line. I just want to make sure TNK. So I'm going to put that in here. TNK. Hit enter. And there we go. Now let's look at this. I'm going to use the cycle finder. I'm going to annotate, okay? And I'm going to use it, instead of using the vertical lines, I'm going to use, it's more of a wave pattern, but watch this. Take that low. This is the most noticeable low to the left, and I'm going to try to grab this low. You see that? There we go. Isn't that beautiful? Look at that. It follows that cycle almost perfectly. Look at that. Up to here, then it goes out of sight, comes down a little bit, and it's starting to go up on this one. If I shift that just a little bit to the left, let's see what happens. I could probably get away with that. Well, look at that. The cycle line is actually leading the market. That's really interesting. Huh. Look at that. The cycle line is leading the price. You can see how well that fits. Now, if I want to get rid of that, let's see if I can do that and hit delete. Let me use the other one. It's not going to let me delete it. Okay. Let me just do that again, TNK. And I'm going to use the other variation so you can see. I'll use this one now. There we go. Cycle line. This one measures from the high. Look at that. Is that incredible? Look at that. Boom, hits a low, hits a low, a little bit, 3 days off that low. Here's another pivot point. So look, we'll probably head down and go lower. So Ron, you said that you're looking to buy this. Now, on this one, it's hard to see, but there's a gap below the market because Friday it gapped up. The cycle line is telling me it's probably going to be drawn back. Another thing is today we had a red candle. It was on lower volume. So price is going up and volume is starting to drop today. So, Ron, the only conclusion I can come to at this point is that I wouldn't buy. Risk management involves your stock selection as well. You could absolutely buy it and don't go on what I just said, but what the cycle line is telling you is that if you do buy it, you better make sure you put a tight stop in below one of the most recent lows. Let's look at VNQ in the same thing, and then I'll go to my Thinkorswim charts. V and the line's better. So let's look at this one again, and you'll probably see. So I'm going to take that noticeable low right there. Take that low, connect it to this low. Okay, I'm trying to see what I'm doing is I'm using the first two lines. You see, I took the first line, I'm dragging the second line, and what I want to do is I want to try to capture as many of these lows as I can. All right, now look at this. Here's a low. Here's a low. That one missed. Here's 2 days off the low. Here's right on a low. And here's 2 days before a low. So what does that mean? Halfway through these two lines, you're probably going to see a high. Now the cycle on this one is from September 10th to October 12th. So just about a month. So the cycle for this one is about a month between lows. And again, PB, if I were you, I would keep another tight stop, because if you're using a roll reversal line, you could take that high from this vertical blue line, draw it across, and your support is probably going to be around 79.5. So if you buy it at 81 and it's a green candle, I would put my stop probably around 79 and keep a $2 risk per share with a stop loss below support. Let me do one more. Sheldon has PM. If you could tell me, Sheldon, what your intentions are for this, if you hold the stock already or you're thinking about buying it, yeah, please let me know. Right now, I'm already on guard because we've had such a long stretch of positive candles, and the past 3 days we're seeing drop in volume, so that's a big key. I'll switch to the other charts here shortly because I know they'll be bigger and clearer for you. But again, let's try it two ways. Let's measure from the lows. Let's measure from the highs. I'm going to try measuring from the highs now. So I'm going to click on Annotate. It's going to bring me to the vertical line right here. All right. I'm going to take this noticeable high right here. And before I draw that line, see, there's a high here. So I'm going to try to draw from this high to this high, dragging my mouse to the right to see where this brings me. Oh, that's not right. Okay, hit the cycle line. Okay, so I'm going to collect this high, drag it to this high, And while I'm dragging it to the right, I'm trying to find some noticeable highs. And this is pretty darn close. This is about as close as I'm going to get. Now look, here's the high, it hit. Here's pretty close to a high, so I'm going to say that hit. This came very close to that very high the very next day. This is 2 days off the high. So what does that mean? It means we're getting very close within days of hitting another pivot point to the downside. So again, PB, you have to be very, very careful with the Sheldon, excuse me, Sheldon, you have to be very careful with this, because now I'm going to my calendar. Remember, I'm going to the bottom left to measure the distance between the cycle. That's August 4th to September 14th. So we're talking, that's about a 40-day cycle. So if we take September 14th, you're talking November, third week in November, this is probably going to start dropping, maybe even sooner. It might even be a little bit sooner. So be real, really careful with that one. If you own this one already, then I would recommend, or Sheldon, if you already owned it, then I would say, you know, protect it with a stop. But to take a new long position after the stock has had one of the most incredible rallies in the past year, I would be really careful. Let's look at this one on the chart. Hold on, let me get this back to. Let me get that back. Hold on. I have to get that too. All right. So that was PM. Let's look at it now. And let's analyze it on a bigger chart. No cycle lines. Oh, I have a really hard time getting into it at this particular point. And here's why. Look at the angle. Look at this. Oh, that's a vertical line. I got to do a trend line. Forgive me for not checking that first. I'm going to go to drawings. I'm going to draw a trend line. Look from that low to the current high. There it is. Look at from this low to this high. Look at from this low to this high. See what happens? You see the pattern? Look at even on the shorter upward legs from that low to that high. See how steep these rallies are? And what happens is this stock is notorious for pulling back and correcting. So what I think could happen, I think this stock could drop all the way back down to 83. Just from looking at past history. Why? Because here's a high, roll reversal, pulled back, right? Here is a high. Boom. It pulled back. Go back here. Here's a roll reversal. It pulled back. You see how it peaked out and then pulled right back to the line? So here's the next roll reversal. So without confusing you with too many lines here, I think it could pull right back to 83. Now, Sheldon, here's the great thing. If it does pull back and then you see a bounce, what are you going to do? You could buy it 83, 83 and a half, 84, and then put your stop right below that roll reversal line. That's the way I would play that one. Okay, Herschel, let's go to RAD. Herschel, do you know what you have an idea? You looking to buy it? Looking to sell it? What's your idea there? I like it on the buy side. A little bit different than what we've seen in some of these other stocks. Because look, right here, what's that? That's a big gap. Gaps fill. After they fill, there's an 80% chance of a reverse after the gap fills. So guess what? This stock looks like it's pivoting beautifully off of the gap fill support. Now, what else do I see? I see another gap. Now that this gap is filled, and it looks like historically this stock loves filling the gaps. In fact, in the past year, 100% of the gaps have filled. 100%. So the only gap that's left open is up here. So I think that this stock has a great chance of getting up to 8.5. Now, doesn't look like much in price, but holy mackerel, that's a 30% move if that gap fills. That's a 30% ROI that you would get if you buy the stock around 6.5. And you know, you also have to be careful. Although I think it could go up in the short term, look at the weekly chart. Well, so far the weekly chart looks bullish too. This looks pretty good. I like this one. So far, this is the best buy candidate I've seen. And for those of you who are guests and just being a fly in the wall, I would write this one down. I would put this one on your watch list. In fact, I'm going to do the same thing. I have an iPhone. I'm not kidding you. I'm putting it in my watch list right now. And Yahoo has a little app for your iPhone where you can track stocks, and that's what I'm doing right now. I'm putting RAD in as we speak because I'm going to track this one. I'm going to track this one with you and see how that works out. Okay, so it's in my phone. Should be at least on your watch list, and let's look at this one as it rallies. Now, one other thing, Herschel, if you are in this already, hopefully you've recently bought it. I don't know if you had it and you suffered with it on the way down, but I would definitely put a stop loss order somewhere below that low. Right there. Can you see that? That's like a little hammer pattern right there. That low is 588, it looks like. 588, yes it is. So I would probably put my stop around 560. And I would not hold on to this if it comes back down. Here's why. It looks like it's really trying to bounce off of the support level. And there has been a drop in volume, but that was on the way down. So that tells us the sellers are weakening here. And you really need to see the volume start to pick up right here. I would have loved to see higher volume today. Tomorrow, if you see lower volume, be very careful. You want to see higher volume tomorrow, and you want to see a green candle tomorrow. That would be ideal if you can see a big spike in that, because I think that's what it could look like. Now, part two of this, after you've set your stop, you also have to set a price alert or put a limit sell order to sell it when it gets up at 8.5. Because if it goes up to 8.5 and fills the gap, there's an 80% chance it's going to start to pull back from there. Let me give you a real life example. Let me just check the names. Who's on here? I'm just checking to see if my sister is on this line. My sister, her name is Patricia, married name Santa Rufo. No, she's not on here, so I can talk freely about her. If she was on the call right now, I would talk about her anyway. Because look what happened. We put out a trade alert on NUGT. Let me just show you. And Herschel, make sure you're paying very close attention to this. Now, NUGT, we put out a buy alert right here when we had the bullish engulfing pattern. This was before the stock split, 10-for-1 reverse split. The stock, boom, zoomed up, made 40, I think it was like 40 to 43% in less than a week. And then right here, a bearish engulfing pattern showed up. On this day, I told my sister to sell it right there. And I told her on the opening. Now, that's a bearish engulfing pattern. So can anyone tell me why I would have told her to sell in the opening when this bearish engulfing pattern didn't exist? Can anyone tell me why I told her to sell it? Let's see. Who are the real chartists out there? Anyone like to answer that? Okay. I'll answer. I'll start to answer it. And say, oh, Dylan, right on. Absolutely. When the stock opened, remember, this had not occurred yet. It gapped up. It gapped up. After it gapped up here, it gapped up here. That was the third gap up. And I told her to sell it. Guess what she told me? She said, I'm not going to sell it because I think it's going to go higher. And in so many words, I said to her, Patricia, bulls and bears make money, but pigs eat, and I gave her the rest of that. Pigs eat crap. She didn't sell it. It went down that day. The next day, it bounced a little bit. On this day, she said, this is what she said to me. I couldn't believe it. She said, ha, 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 see, it went higher. And I said, don't get crazy now. I've only been doing this for 33 years. I said on this day, right here, I said, you should sell it. And I put it all in caps. She didn't. Next day, boom, it went a little bit higher, closed a little bit higher, But look what happened on Friday. She didn't sell it. Today she didn't sell it. And I told her I think there's a chance it's going to come right back down to 32. Now, why is this important to Sheldon? Herschel, rather. Because the other stock that we're looking at has the same type of pattern. Big, big vertical move. There's a gap above the market. Once it fills, it'll probably come back down. So, folks, listen. On the individual stocks, I'm only 82% accurate. On the general markets, I'm 100%. But you know what? I'll still take 82% anytime. Who cares if I'm wrong 18% of the time? If you're protecting yourself on the way up, then go for it. In fact, I think on the last, on one of the webinars, we were talking about NUGT, and we were talking about another one about trailing the stop. And even if you trailed the stop up, even if you did this, on Friday, you would have been stopped out anyway. And that was very, very close to a bearish engulfing pattern right there, too. So for those of you who are the Oracle subscribers and you're still not out of this, I would strongly urge you to take your profits while you can, because you're still in the money on that one. Okay. I got so many stocks coming in, it's hard for me to keep up. All right, Herschel, I hope that helped you out. And UNH, please, folks, help me help you by putting in what your intentions are. You hold it, you think about buying it, you've sold it, you think about selling it, I don't know. UNH has this long candle is a hammer pattern. And let me define that for you if you're not familiar with hammer patterns. A small body candle, or I should say a candle that has a long shadow that's 2 to 2.5 times longer than the body. That's the key. The shadow has to be 2 to 2.5 times longer than the body. It doesn't have to be a short body candle like this one. This was a hammer as well. This was close to a hammer, but not quite. It has to be the body times 2.5 equaling the length of the shadow. The shadow is the vertical line underneath it. So this is bullish. This is also fairly bullish, even though it's a red candle. And this today, and this was very close to a bullish engulfing pattern. So what I think is going to happen here, I think it could go up to test that high before pulling back. Now, this is a fairly expensive stock, trading around $120 a share, $120.73 to be exact. So, Ann, if you own this one, you have to put a stop. I would put a stop right below today's low. I wouldn't mess with that one, because if it starts to turn negative, it'll probably drop to 114.5 right there, which is that support level. And that's a pretty significant drop if it fails to hold that low. So I'm looking to see if Ann... Okay, you're holding it. Okay, good. Hold it. Put your stop below that low. If it sells you out, if you get stopped out, don't worry. And here's why I say don't worry. Look at the weekly chart. Look at that trend. Holy mackerel. That's an incredible trend. But look what's been happening up here. This is a 3-year trend, by the way. But look at this volatility up here. Let me just go ahead and erase all of these lines for a second, because look what's happening. We're in a trading channel at the top. You see this? Resistance and support. I really don't know what happened on this week. This looks like they had a bad price on the low, because I can't believe it went from 120 to 90 in 1 week. I don't know how that happened, but this is in a trading channel right now, and it's in the middle of the trading channel. And it looks like it might go up to test that high. If it pulls back from that high, the recommendation would be to raise your stop as tight as you can, and don't be afraid to get stopped out. You're protecting your profits. Absolutely. Okay, let's see. Going back to, let's see. So Hassan says FL. Are you long? Are you short? There is a weekly chart. That looks pretty darn positive, if you ask me. This is a trading channel. Joining line pattern. There's a perfect textbook trading channel. On the weekly chart, we'll have to dissect this by zooming in a little bit. Here's a hammer from last week. That's bullish. This week, so far, you got to be careful because it's only Monday. Right now, can anyone tell me what this 2-day pattern represents? Smaller green candle within the body of the previous red candle. Can anyone tell me what that is? Who are the experts? Hey, Bert, how are you? I'll get to you in a second. Can anyone tell me what that pattern is? I know there's a little bit of a delay in the Q&A box there. This is called the Harami. A Harami is as powerful, or I should say as reliable. Yeah, you got it, Bill. As reliable as a bullish engulfing pattern. Now, that's the weekly chart. Remember, it's Monday now. By Friday, that could turn out to be a big red candle. You've got to be careful. That's why I now have to go to the daily chart. So, chart from Thursday, hammer pattern. The only thing I don't like, I don't like this drop in volume. I just don't like that. I want to see higher volume. So, if the volume is dropping while the price is going up, what you have to do is you have to trail your stop beneath the low of each progressively higher day. So if tomorrow we see a higher high and a higher low, then move your stop from here up to the low. And that's how you trail the stop. I would do it manually. And hopefully that helps you out right there. All right, now Bert is long Facebook. All right, and you want to sell. All right, let's see, Bert. Hold on. FB. Let's see. What's the... I would sell it. Absolutely. Sell that baby, Bert. That's my personal opinion. That's what I would do. Why? Look at the volume dropping. Not big, dramatic drop in volume, but it is a drop in volume. Here's another thing. 1, 2, 3, 4, 5, 6, 7, 8 consecutive green candles at a resistance high. 8 consecutive green candles. Folks, Market Guy fans, what is a long stretch of green candles called? Here's the quiz. Can anyone tell me? Any long stretch, stale green. Yeah, it's stale green light. Thank you, Steve. Thank you, Charles. Thank you, Nathan. Gerald, thank you. You're all right. And what does that mean? It just means that look back in history. 1, 2, 3, 4, 5, 6, 7, 8. Here we had another long stretch of green candles, and then boom, it sold off. Anywhere else where we see 8 days in a row? Well, back here, 1, 2, 3, 4, 5, 6, 7 green candles in a row. See that? And then what happened? It sold off. So if history repeats itself, and I think it will, at a resistance area with dropping volume, there's a great chance that that's going to drop. So Bert, I have no problem in concurring with you on that idea of selling. I would definitely do that. And if the stock pulls back and bounces off support, you buy it back at 90. Do it all over again. That's, of course, if it pivots and goes higher off the support. Okay, let's see. Wow, what action. You folks are keeping me busy here. Let's see. Who did I leave off with? Bert and... All right, now, Gary says, what's your outlook on MO with earnings coming up shortly? Okay, let's see. MO. That's Altria. Used to be Philip Morris. Wow. You know, here's the thing about earnings, Gary. How many times have you seen a company beat the earnings and still sell off in price? Raise your hand. Who wants to raise your hand? How many of you have seen that? You can raise your hand. There's a little button there that you can raise your hand. Okay. Well, many times that will happen, and here's why. It is expected that Altria is going to beat the estimate. So what happens is, just prior to the earnings, the investors are buying in. So when their expectations have been met, a lot of times the profit taking takes place. So I think this is a very, very stale green light. although there's one maybe small little spinning top of a red candle in there. You have 1, 2, 3, 4. Let's do it this way. I'll zoom in. How many consecutive up days have we had? Pretty much almost all of them for the past 2 weeks. So, bullish engulfing pattern. But here's the telltale sign, Gary. Look at that. Big green candle today on lower volume. What I have to do now is I have to go to a weekly chart. There is no resistance. There is none. Maybe if I go to a monthly chart, no, there is no resistance. So we have to rely on our skills to talk about what a retracement might look like. You can say here, from this high, maybe to this high, I'll go slightly over that. There is your breakout point, right around 56.5. Many times after a stock breaks out, former resistance eventually turns into support. So I would take profits even now, wait for the stock to pull back, bounce off here, then I'd re-enter back in that area. That's what I would do. Okay, now Sophie asks, I think there's an option question in there somewhere. Hold on, Sophie. I think I thought I saw something from you. Where is that question? Oh, I'm trying to. Sophie, I have to look for that in a little bit, or if you want to type it in again, it kind of got lost in the wash, kind of got washed out. Oh, there it is. Okay. Sophie says, you can. Oh, okay. Sophie was telling me that I could hit delete on the right-hand corner. Okay, I have to look at that. I don't want to mess up my whole computer, but Sophie, I'll take your word on it that you can delete all of that in one push of the button. Okay, let's see. All right, now we went with Ann, we went with Gary. Okay, Marie, USO. Marie, if you can, I'll give you a little time to tell me what your thoughts are on what your intentions are for the stock, USO, right away. This one looks promising only because we see higher lows. See, we see a low here, a higher low here, a higher low here, and slightly, very, very slightly higher high. This is actually a triangle pattern. And Marie, the good news for you is this. Now think about this for a second. If you're a buyer and the price has been going down, you want the volume to be dropping. Why? Because if the price is going down and the volume is going down, the sellers are weakening. Now that you're on a trend line, there's a good chance the stock could rally and go up to test resistance. Now, that could mean another $1, maybe even $1.50 rally in the stock. So if you own it, good for you. If you're thinking about buying it, good for you. You say you're long at 14.82, that's only a penny below where it is, so good for you. Now, Marie, here's the tough question, and I'm going to hold you accountable in front of everybody here on this call. Where's your stop? Where's your stop loss order? Let's see. Be brave. Tell me where it is. And please tell me you have a stop. Stops are critical in this market. You need that. Okay, let's see. Drum roll. Marie, I think, is typing. Drum roll, please. Where's the stop? See, Marie, here's the key. If you have it anywhere below that line, you're in good shape. So, oh, there it is. Marie has a stop. Marie has a stop at 14.80. That might be a little too tight, Marie. A 2-cent stop is. See, here's why. You're putting the stop on or above that trend line. Here's what I would do. I would at least take that low from this day. I'll zoom in here for you. Holy mackerel, look at the clock already. I can't believe this. All right, see this low right there? That low is, and the low is going to show up on the bar up here. The low for that day is 14.63. So Marie, I would put my stop at 14.60. I would put it just below that low. And I'm glad you do have a tight stop in this one because, let's face it, the stock has had a tough time over the past year, and it got slammed from 40 down to 12. That's a significant hit. So I think that you are even in good shape here. It almost looks like there's a cup and handle, almost a cup and handle forming at the bottom there on the weekly chart. So I think you're in really good shape there. Marie, I'm going to put this on my watch list as well. Oh, I have it on there already. Look at that. I've been tracking this one. Because this is a great option stock too. It's not just one that the equity traders can trade. Any of the option traders out there, what you could do in a stock like this is you could sell put spreads. You can buy call spreads. You can sell cash secured puts. You can do diagonal spread on this one. That might work. And there's a lot of different strategies that you can overlay as an option trader on this one too. Plus, this is an oil fund, and there's talk that the oil markets have bottomed out. So I think long term you're in good shape with this one as well. Folks, you almost ran me ragged here. There's a lot of stocks, and I'm sorry I left a lot of stock symbols on the table. We didn't run out of energy. We just ran out of time. And I just want to point your attention to the Market Guys website right here. You go and click on the videos. For you folks that are brand new, I talked about a lot of concepts today. Talked about fan patterns. I talked about the gaps. Talked about trading gap. What else did I talk about? Talked about the role reversal today. I talked about cup and handle. Do I have a cup and handle? I think I do. Talked about hammer patterns right there. Talked about dojis and spinning tops, and engulfing patterns right there. Talked about the bullish engulfing patterns, and I talked about triangles. These are 3 to 7 minute videos that you can go and review. If you have any questions about that, that's something that you could submit the next time we do one of these web seminars. And if you're not already subscribed to the weekly market report, it says newsletter, although it's not a newsletter, it's a video report. Maybe we should change that, Bill. I know my partner's listening in. But all you need is your email address and first name. We don't need to know your phone number and your address and your date of birth and all that garbage. Not garbage, but we don't need that data. We're not going to spam you. We do not sell our lists. We keep them very private. We're not going to loan it out to anybody. We're not going to do that. So if you want to receive the report, just put your email address in there. If you have a question, I'm doing this for the subscribers only. If you have a question that I did not address, I will be willing to take some time during the week to look at your stock that I didn't get to today. So just put your name, email address, and in the message say, AJ, I'm long such and such a stock. Here's the ticker symbol. What do you think? I'll date it so that hopefully you'll get it within hours, and we'll do it that way. Okay, something new and different to help you out and add more value to tonight's web seminar. It's right at the top of the hour. That was exactly an hour. Thank you so much. I had a good time. I hope you did too. We'll talk to you soon, folks. Good night.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.